Hello and welcome to InvestTrek, the channel dedicated to helping new investors grow their knowledge to build wealth and achieve financial freedom. And today we're talking about something that gets me fired up, turning a small amount of money into a significant chunk of change. We're diving deep into the strategies that can help you transform a humble $100 into a cool $10,000 in 2024. Now I know what you're thinking, is that even possible? And the answer is absolutely. With the right strategies, a little bit of patience, and a whole lot of hustle, you can make serious moves in the financial world, even if you're starting small. Over the next few chapters, we'll be exploring a range of investment opportunities, from the exciting world of cryptocurrencies to the more traditional stock market, and even some unique side hustles that can help you boost your income. We'll break down the risks and rewards of each strategy, giving you the knowledge you need to make informed decisions. Remember, this isn't about getting rich quick. This is about building a solid foundation for your financial future, one smart investment at a time. So buckle up, grab your notebooks, and get ready to learn how to turn those Benjamins into stacks. All right, let's kick things off with one of the most talked about investment opportunities in recent years, cryptocurrency. Now, crypto has definitely had its fair share of ups and downs, but it's still a market with massive potential for those willing to take on a bit of risk. At its core, cryptocurrency is basically digital money, secured by cryptography. Think of it like virtual gold, but instead of being stored in a vault, it's secured on a decentralized network known as a blockchain. This means there's no central bank controlling it, which can be both a good and bad thing. Now, one of the biggest draws of crypto is its volatility. We've seen coins like Bitcoin and Ethereum skyrocket in value, turning early investors into millionaires practically overnight. But remember, what goes up can also come down, and crypto is notorious for its wild price swings. So if you're thinking about dipping your toes into the crypto waters, it's crucial to do your research. Understand the technology behind each coin, its potential use cases, and the overall market trends. Don't just jump in blindly because everyone else is. Now, when it comes to actually investing in crypto, you've got a few options. The most well-known are the big players like Bitcoin and Ethereum. These are often considered the foundation of the crypto market, kind of like blue-chip stocks in the traditional market. But there's a whole world of altcoins out there, each with its own unique features and potential for growth. Some popular ones include Solana, Cardano, and even meme coins like Dogecoin, which, let's be honest, started as a joke but has gained some serious traction. Another option is to invest in cryptocurrency ETFs, or exchange-traded funds. These are like baskets of cryptocurrencies that you can invest in through traditional brokerage accounts. It's a way to diversify your crypto holdings without having to buy and manage individual coins. Check out our video on ETFs, where we delve more deeply into Bitcoin ETFs as well as many other types. Remember, the key here is to diversify. It's important to remember that in crypto, there's a distinction between Bitcoin and altcoins, which are any other coins than Bitcoin. With Bitcoin, the best approach is to focus on long-term strategies like buying through dollar cost averaging and then holding, instead of trying to predict short-term price movements. With altcoins, on the other hand, it's best to spread your investments across a few carefully selected coins to minimize your risk. Now, before you go all in on crypto, it's crucial to understand the risks involved. Once again, we draw a distinction between Bitcoin and altcoins in regards to managing risk. For Bitcoin, the best way to manage risk is to simply buy and hold for the long term. The best way to invest is through dollar cost averaging, which is buying a fixed amount at regular intervals regardless of its price. This avoids the effects of market volatility. For altcoins, aka crypto, the best ways to manage risk are to do your due diligence. Research the team behind each coin, look for red flags like unrealistic promises or a lack of transparency, and never invest more than you can afford to lose. Another way to manage risk is to set stop-loss orders. This is basically an automated sell order that gets triggered if the price of a coin drops below a certain threshold. It helps you limit your losses and protect your investments from sudden market crashes. Next, diversify your altcoin holdings and stay informed about the projects you're invested in, and don't forget to take profits when the coin has increased substantially in price and appears to be oversold or overhyped. And lastly, only invest what you're willing to lose given the speculative nature of the market. All right, now let's move on to another fantastic investment strategy, especially if you're just starting out stock market micro investing. This is a great way to get your feet wet in the stock market without needing a ton of cash up front. Platforms like Robinhood and Acorns have made it incredibly easy to start investing with just a few bucks. You can buy fractional shares of companies you love, which means you don't need thousands of dollars to own a piece of Apple or Tesla. One of the coolest features of micro-investing apps is the roundup feature. Basically, every time you make a purchase, the app rounds up the transaction to the nearest dollar and invests the spare change automatically. It's like investing on autopilot, and it's a great way to build up your portfolio without even thinking about it. So, if you're intimidated by the stock market or think you need a lot of money to get started, think again. Micro-investing makes it accessible to everyone, and it's a fantastic way to start building wealth for the long term. Now, one of the biggest advantages of micro-investing is the ability to diversify your portfolio easily. Instead of putting all your money into a single stock, you can spread it across hundreds or even thousands of companies. This is crucial because it helps to minimize your risk. If one company goes under, it won't tank your entire portfolio. By investing in a wide range of stocks, you're essentially hedging your bets and increasing your chances of earning consistent returns. Many micro-investing apps offer pre-built portfolios based on your risk tolerance and investment goals. This takes the guesswork out of choosing individual stocks and ensures that you're investing in a diversified and balanced way. Remember, diversification is key to long-term investment success. The beauty of micro-investing is that you can start small and gradually increase your investments as you become more comfortable. Even if you're only investing a few dollars a week, it can add up significantly over time, especially with the power of compounding. Compounding is basically like earning interest on your interest. As your investments grow, they generate more earnings, which then get reinvested and generate even more earnings. It's a snowball effect that can turn small, consistent investments into a significant nest egg over time. So don't underestimate the power of starting small. The key is to be consistent, stay disciplined, and let the magic of compounding work its magic. Remember, the best time to start investing was yesterday, the second best time is today. Alright folks, let's dive into the world of peer-to-peer lending, or P2P lending for short. This is a game changer, especially if you're looking for higher returns than your typical savings account. Imagine becoming the bank, lending money directly to people or businesses, and earning that sweet interest income. That's the power of P2P lending. Platforms like Lending Club and Prosper are the big players in this space. They connect borrowers with investors like you. You get to choose which loans to fund based on the borrower's profile, loan purpose, and of course, the interest rate. It's like having your own little lending empire. Now, the beauty of this is that you can often snag interest rates significantly higher than what traditional banks offer. I'm talking potentially double-digit returns depending on the risk you're willing to take. But remember, higher returns usually come with higher risks, and we'll get into that in a bit. P2P lending can be a fantastic way to diversify your investment portfolio. Instead of putting all your eggs in one basket, you can spread your money across multiple loans, reducing your exposure to any single borrower defaulting. It's all about managing that risk, folks. Now, before you go all in on P2P lending, let's talk about the elephant in the room risk. Yes, the potential for high returns is there, but it's not without its downsides. The biggest risk is borrower default. Remember, you're lending to individuals and businesses, not a giant financial institution. People lose their jobs, businesses fail, and sometimes borrowers just default on their loans. It's the name of the game, and you need to be prepared for it. That's why it's crucial to do your due diligence and carefully assess each borrower's creditworthiness. Look at their credit score, debt-to-income ratio, employment history, and the purpose of the loan. The more information you have, the better equipped you'll be to make informed lending decisions. Another risk to consider is platform risk. While platforms like Lending Club and Prosper have been around for a while and have solid track records, there's always a chance that something could happen. It's important to choose reputable platforms and understand their policies in case of borrower defaults or other unexpected events. Don't let the risks scare you away from P2P lending altogether. With the right approach, you can mitigate those risks and set yourself up for success. Remember, diversification is your best friend. Instead of putting all your money into one loan, spread it across multiple loans with varying risk profiles. This way, if one borrower defaults, it won't significantly impact your overall portfolio. It's like the old saying goes, don't put all your eggs in one basket. Another key strategy is to start small. You don't have to go all in right away. Dip your toes in, get a feel for the platform, and gradually increase your investment as you gain more confidence and experience. Remember, slow and steady wins the race. Take advantage of the automated features that some platforms offer. For example, you can set up auto-investing, where the platform automatically invests your funds into loans that meet your criteria. This saves you time and ensures you're consistently putting your money to work. And lastly, don't forget to stay informed. The world of P2P lending is constantly evolving, so keep up with industry news, platform updates, and changes in regulations. The more knowledge you have, the better equipped you'll be to make smart investment decisions. Let's talk about flipping items for profit. It's like a treasure hunt that puts money in your pocket. Find something cheap, buy it, and resell it for a higher price. People are always looking for deals on clothes, electronics, and collectibles. Connect buyers with items they're searching for and make a profit. It's like being a middleman, but in a good way. Find hidden gems that others have overlooked. Maybe it's a vintage band t-shirt that could fetch a pretty penny online, or a used smartphone that just needs a little TLC. The possibilities are endless and you don't need a ton of money to start. So, you've found some awesome items to flip. Now what? You need to get them in front of potential buyers. Online platforms make this easier than ever. eBay is a popular option, allowing you to list items for auction or set a fixed price. With millions of active buyers worldwide, you have a massive potential customer base. For local sales, Facebook Marketplace is great, eliminating the need for shipping. Yes, these platforms take a small percentage of your profits, but the potential profits far outweigh the minimal fees. Factor those fees into your pricing strategy to ensure a healthy profit. Flipping items for profit isn't just about stumbling upon random treasures. To maximize profits, become a trend spotter, understanding what's hot and in demand. Stay ahead by watching social media, fashion magazines, and pop culture. Are certain brands or styles making a comeback? Upcoming events or holidays can drive demand for specific items, so get out there, start exploring, and see what treasures you can unearth. Let's talk about turning $100 into $10,000. Starting a side hustle. Starting a business sounds intimidating and expensive, right? But it doesn't have to be. With the gig economy, there's never been a better time to be your own boss. Forget the 9-to-5 grind. With a side hustle, you call the shots. Plus, you keep all the profits. It's like giving yourself a raise and a promotion. The beauty of a side hustle is that it can be anything you want it to be. Now let's talk about a specific side hustle that's been gaining a lot of traction lately: dropshipping. This business model has exploded in popularity, and for good reason. It's a relatively low-cost, low-risk way to get started in e-commerce without having to deal with the headaches of inventory management or shipping logistics. Imagine this. You create an online store selling, let's say, phone accessories. A customer places an order for a sleek new phone case. But here's the kicker. You don't actually have that phone case in stock. Instead, you partner with a dropshipping supplier who handles all the inventory and shipping for you. You simply forward the customer's order and payment details to your supplier, and they take care of the rest. The customer gets their product, the supplier gets paid, and you pocket the difference in price. It's a win-win-win situation. Now I know what you're thinking. Doesn't that cut into your profits? Of course, you'll have to factor in the supplier's fees and shipping costs, but the beauty of dropshipping is that you're not stuck with a bunch of unsold inventory if a product doesn't sell well. Plus, you can experiment with different products and niches without having to make a huge upfront investment. Starting a side hustle is all about taking that first step, even if it's just a small one. Remember, you don't need to have all the answers right away or quit your day job just yet. Start small, test the waters, and see what works. The most important thing is to take action and start building something you can call your own. And here's the best part. As you gain experience and confidence, the potential for scaling your side hustle is immense. You can expand your offerings, increase your marketing efforts, or even automate parts of your business. Who knows? That little side hustle you started with $100 could blossom into a full-fledged business that replaces your 9-to-5 income and gives you the financial freedom you've always dreamed of. The key is to stay persistent, adaptable, and always be willing to learn and grow. The world of entrepreneurship is constantly evolving, so embrace the challenge and never stop innovating. Remember, the only limits to what you can achieve are the ones you set for yourself. So, get out there, unleash your inner entrepreneur, and start building the future you deserve, one side hustle at a time. So there you have it, folks. 5 exciting strategies to potentially turn $100 into $10,000 in 2024. From the exciting world of cryptocurrency to the accessible world of micro-investing and the potential of peer-to-peer lending to flipping items for profit and starting a side hustle. Each strategy offers unique opportunities for growth. Take calculated risks, be proactive, and never stop learning. We included links to resources for more information below. If you found this video helpful, hit that like button, subscribe to the channel for more content like this, and don't forget to ring that notification bell so you never miss an upload. Thanks for watching, and happy investing.